Thank you for tuning in to a special edition of the Vulcan. This Vulcan report is a post-election report. It is now November the 9th, and it's Wednesday, 2016, and it's about 10 minutes to 10 a.m. Eastern Standard Time. Looking at a live chart of the Dow Futures. Quite the chart. A lot different than what we saw last night. What I'm going to point out to you is going to be some potentially devastating news. But before we get into that, let's deal with the elephant in the room. Everyone likes it when I'm wrong, so I'll be the first to say I was absolutely 100% wrong in the fact that I thought that Hillary was going to be the president and that President-elect Trump was just the person running beside her to help her get elected. That's the way it was looking, and I was wrong. Which goes to prove my other point. You have to be able to communicate with the algos. If you don't have some sort of methodology to read and interpret the algos, i.e. the price action, then you're not going to know what's going on. The markets tell you what's going on. So leading up to the election, I realized last night when I was recording those videos, and I told you, I said the market is pricing in a Trump victory. All right, hours before it was, obviously apparent that was going to be it, because that's what the markets do. They tell you what's going to happen. So you have to be able to put aside your bias and go with what the price action is telling you. So last night was a perfect example of, it's fun to prognosticate and to say what you think is going to happen, but at the end of the day, you have to let price tell you what's what. So I'm just glad that I had enough sense to look at the price action and put aside what I thought. But let's look at a few things that took place just like the price action was telling you that it was, and I indicated in the videos last night. First thing I said, don't get married to this downside price action that we were seeing, because I did warn you that it wasn't going to stay down. They weren't going to let the market stay down. All right, it recovered itself, as you can see with this hyper super parabolic bar. All right, the Dow got all the way down to the 17,418 level, blowing past all previous supports. All right, that's what they do. All right, so the plunge protection team comes in and boom. All right, it's just like I told you. They turned off those circuit breakers. Those circuit breakers were not on. If they were, then we would have saw the curbs in when the Dow was down 300 and the S&P and the NASDAQ down 65. It would have chilled out and trading would have halted for like 5 minutes, 10 minutes. Excuse me, and then it would have came back. But that's not what happened. They let this thing fall like 5%. All right, and from that, trading did not halt. Trading kept going. All right. For those of you that watched my video last night, you saw I showed you the price action still moving. All right, and if that was the case, even if they halted and turned off turned on the circuit breakers, I should say, you would have still saw the price action just hanging down there, like it did during 9/11 and things like that. Also during the Brexit, there was no circuit breakers. That's why I tried to explain to you guys that this is not Brexit. With Brexit, the pound never recovered. This is United States. We have a plunge protection team. They don't. So they come in and they rescue stock markets. They don't let stuff stay that way. And it didn't just rescue the futures. Let me show you something here. Check this out. Look. All right, let's go over here and look at this price action. All right, here we go. The Dow up 40 now. Okay, see where you went last night? Look at the NASDAQ. It was down to the 45 handle. Now we're back up to the 48 handle. Look at the dollar. Dollar made it down to the 95 handle. Now it's back up to the 98 handle. That's a 3-cent price swing, 300-point price swing in the dollar that traditionally only moved a few ticks a day on average. Okay? Look at gold. Gold was up on its way to like 50, 60 bucks. We hit 13.38. Now it's barely up $10 and it's at 1283. It dropped below 1300 again. Look at it, it's about to go negative. All right, I warned you all about this. I told you that that's what it is. I did tell you. I warned you. So anyone that thought that they were doing something and shorted the market, earlier this week, you're in pain right now. You're bleeding. You're hemorrhaging. What are you going to do? Because your puts are going to expire worthless, and most of you probably got stopped out anyway if you didn't listen. So let's now look at something. I'm going to give you some hope like I did last night. If you were short in the futures or the forex last night, you took profit, then you did good. Because bulls make money, bears make money, but what? Pigs get slaughtered. You weren't a pig. So congratulations to you on that. But I do need to share something with you all that you're not going to get nowhere else. Alright, I told you and warned you about gaps. Gaps get filled, period. Well, you got your gaps filled in the Dow. You got them in the NASDAQ, the S&P, all the stock indexes, the US dollar. I showed you all that last night. Okay. Now I'm going to show you something else. And some of you may not like this, but it is what it is. Okay. There's a little secret in the algorithms. Just like the gap theory, there's another theory that's a little bit more powerful than the gap theory. Back during the flash crash of May 6, 2010, I did videos covering that. You can go and you can search it on my YouTube channel. You will see it. As a matter of fact, it's one of the last videos in the There Is No Collapse series, so that's an easy way to find it. Just go to that playlist. All right. During the May the 6th flash crash, the Dow had a bar that looked similar like this, where it crashed down 1,000 points, and then they, brought it right back up, but it still went there. Okay, when you have these parabolic wicks like this, all right, on your candle chart, this is no longer just a wick. You know what this is called? It's called a pointer. All you have to do is go like this and go like this, and now you have a pointer pointing down. This is a signal in the algorithmic code that eventually this is where the market is headed. It's almost like a gap, but not really. It's something else altogether, and I don't really know how to fully explain it. It just is. These wicks, these pointers I like to call them, have existed going all the way back to the year 2000, when the Fed would come in and lower interest rates in between meetings without warning and shock the markets. You would also see this type of pointer during FOMC days when they made their announcement if they lowered rates by a quarter point or half a point or whatever. You would have these wicks like this too. And eventually the markets come back and they go to this direction. And they take out the extension of the pointer and keep going in that direction. So even if this was reversed and this wick was up here, then eventually the market is going to come up here. It acts like a magnet, almost like a gap, where you're not feeling it, you're coming and running to it. So that's the only way I can explain it to you. So at some point, we're going here. The Dow is going here. I'm not saying that it's going to stay or it's just going to, crash and burn. I'm just saying this is where you're headed. All right, now let's look at one more example, because this is also extremely important. All right, this is your gold chart. Here it is in reverse. All right, your pointer is up here. It's telling you 1340. We're going there. All right, we are going there. At some point, after we finish waffling around down here in these trenches, maybe even going to 1240 or whatever, you're going here. Eventually, you're going here. This is the pointer letting you know where the trend is going to be. It's just how it is. You don't have to like it. You don't have to agree with it. You just have to get with the program. Because at the end of the day, we're in these markets to make money so we can take care of ourselves and our families, right? So this is what's up. All right. It doesn't matter your bias and your opinion. It just matters what the price action is telling you. So trade what you see. All right, and use some good money managed stops. Don't get greedy and don't gamble this thing. That's why you need the pulse waves. I don't see how anyone can possibly extract money on a consistent basis in these markets without competitive algos. And the most competitive algo I know is the pulse wave price triggers. You need them. PulseWaveTrading.com. That's PulseWaveTrading.com. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And remember, PulseWaveTrading.com.